Have you ever seen a comeback story quite like this? Lumentum, ticker LITE, is officially riding the photonic AI surge. We are breaking down the Q3 2026 earnings, where the big headline is Nvidia's massive $2 billion bet on this hardware leader. In this breakdown, we're diving into a beat and raise quarter, where Lumentum exceeded estimates and raised its outlook. We'll cover the financial deep dive, the Nvidia catalyst, and the critical risk versus reward factors for the strategic outlook. This was a massive quarter, featuring a 90% year-over-year revenue surge fueled by AI and cloud infrastructure. They achieved record shipments of high-speed cloud transceivers and unlocked massive margin expansion by increasing internal factory utilization. The major catalyst here is Nvidia's $2.0 billion power play. Through a private placement of Series A convertible preferred stock, Nvidia has cemented Lumentum as a preferred hardware partner to fuel next-generation AI cluster scaling. Let's look at the hard numbers from the Q3 2026 snapshot. Revenue hit $808.4 million, up 90.1%. Non-GAAP EPS skyrocketed 315.8% to $2.37. And adjusted EBITDA saw a mind-blowing 1,170% increase to $275.6 million. Beats across the board. Check out this margin magic. Gross margins jumped to 47.9%, a 1,270 basis point expansion. Higher internal factory utilization drove 46% of that gain, while a favorable product mix shifting toward 200G laser chips accounted for the other 54%.
Breaking it down by segment, components make up 66% of revenue at $533.3 million, driven by 200G lasers and co-packaged optics. Systems represent 34% of revenue, led by cloud transceivers and optical circuit switches, growing over 121%. We are seeing a massive geographic shift due to the US data center boom. Revenue from the Americas exploded to 36% of the total, while the Asia-Pacific region shrank proportionally from roughly 63% down to 57.5%. EMEA remains steady at 6.5%. Lumentum is maintaining a fortress balance sheet with $3.17 billion in total liquidity. They successfully exchanged $474.6 million in notes for equity to reduce debt, and their $388.4 million in operating cash flow easily funds heavy AI capital expenditures. Time for a reality check. GAAP net income saw a massive turnaround to $144.2 million from a prior loss. Top-line revenue is vastly outrunning stock-based compensation, even though SBC remains a 520 basis point drag. They are internalizing the future with a $38 million strategic acquisition of a manufacturing facility in Greensboro, North Carolina. This brings critical AI component manufacturing in-house, which is expected to provide a structural boost to margins by 2027. The path to $1 billion is clear. Guidance for Q4 revenue is set between $960 million and $1.01 billion, with EPS expected between $2.85 and $3.05. The big catalyst is the imminent ramp-up of 1.6T transceivers. In the investment matrix, the bull case rests on AI adoption and the 1.6 transceivers ramp. However, the bear case highlights risks like customer concentration, where the top 2 customers represent 38% of revenue, and potential geopolitical tariffs on rare earths. Key takeaways. Lumentum is a top-tier AI hardware play backed by a $2 billion Nvidia investment. They have best-in-class margin expansion, but you must watch for customer concentration and tariff risks. Will LITE officially cross the $1 billion revenue mark in Q4? Let us know your thoughts in the comments. If you found this Lumentum earnings deep dive helpful, don't forget to like, save, and share this video. Follow and subscribe to ZinvestZ for more smart investing insights. Thanks for tuning in.